Keith here for Am I Rich? Today we're going to talk about Fiat Chrysler. Fiat Chrysler, again, yes, it is a company that has just recently, this last week, had a huge stock price drop. And I kind of wanted to address like why it was happening and what do I think? Is the company, imminently going to fail, or is the stock price going to soar? Do I think it's a hold, a buy? Those kind of things for myself. So yeah, let's kind of get into it. Now Fiat Chrysler, if you don't know, it's a company that's run between basically Italy and the United States, but it is a car company, lots of popular brands that people most probably know, like Chrysler, Dodge, Jeep, Fiat, Alfa Romeo, those kind of companies. Lots of different brands, very popular, been around for a long time. Interesting. Now, it has, as of late, kind of gone through a bit of a transition. Now, the company wasn't very profitable. They're kind of having troubles with debt. And so they, several years ago, they started on one of their first 5-year plans, and now they're on to their second. But their first 5-year plan was kind of initiated by a CEO they brought in, Sergio Marcioni. He passed away this last year, so things have kind of changed. But basically, when they started to change their company, they decided to focus on making the company as profitable as possible where they could. And so they focused on brands that were more profitable, more SUVs, more trucks, things like that. And then they really kind of didn't focus on the less profitable ones, and they sold off parts of their business or split off parts of their business that they thought would be better suited, somewhere else, not part of their business because they're not adding a lot of value. And so this is something of a strategy that has really helped make their financials look a lot better. And they've also kind of positioned the company or parts of the company for even more further sales, or a sale of the company maybe, and even a merger with some other car company. So it's an interesting case that what they've done. And even if they don't get a merger or something like that from another big company, they can still basically lay back on their good financials and kind of ride out a good wave, and maybe even be an industry leader in the future if all goes well. Now, of course, they didn't originally think that they would be an industry leader, and that's probably why they had to reposition the business, because at the time, and even now, they don't have as big enough market share to be a dominant auto player, but they do have a big enough share to be relevant. And with good financials, they can build on their share in the future potentially. So yeah, what's kind of going on? Their stock price is currently at $12.90, and that gives it a PE ratio of 6.5, which is super low for most companies. You don't get many this low. I know the auto industry is pretty low in general, so it's not that surprising for the auto industry now that's kind of in a down, depressed area. I mean, the whole auto industry, people are worried about, gas engines are going away, electric cars are coming in and they're not ready, and then they're also worried about we're at the end of an economic cycle. Maybe people will buy less cars pretty soon, so they're going to have this kind of a lot of negative headwinds towards their earnings. So that's the big thing in the auto industry right now. That's why it's depressed. Is 6 for PE too low? And a forward PE is estimated at 3.8, which is very, very low and very interesting for this stock. Its price to book ratio is at 0.7, which means every dollar of equity that you buy is actually, you're only paying 70 cents. So that sounds pretty good. There is a bit of a caveat there, which maybe I'll talk about in a bit. But its dividend, now actually the big reason the stock actually fell at the beginning of the week was that they issued one of these like special dividends, and it was more than 10% of the value of the stock. So that pretty much put a big, they automatically mark down stocks when they give out big dividends like that. So that's the main reason. And then, I don't know, maybe some people sold off after because there's trade war tensions, and maybe they just looked at the stock and said, oh man, it's going belly up, who knows, let's get rid of it. But yeah, the dividend, 1.3 euros per share, and it was only sitting at like 12 euros at the time or something for the share. So it's a pretty big dividend. And they've recently installed an annual dividend, which is 5.6% per year at the moment. So a pretty healthy dividend, and it's not even all of their earnings. It's not like a REIT. It's not like 90% or more. So it seems like at the moment, fairly safe dividend. I'm sure they could change it if they had to, but it makes it kind of an attractive buy, especially when people are looking at buying like Ford, which had much kind of sketchier financials perhaps. They were looking at it and saying, oh, it had a 7% dividend at one point. Well, Fiat Chrysler is kind of on a good, much better footing, and well, I don't know, much better, but it's a better footing for sure. And better models that they've rolled out, appeal to their base better. So I think this dividend is pretty attractive at the moment. So that's one good thing about it. And if you look at the 5-year growth for this company, it's basically been at 25.5% growth every year for its intrinsic value, which is amazing. That's really, really high growth. And the average for the industry is closer to like 12. So really good growth company. And can they, what does all this mean? So I guess you have to look at some of the headwinds for this company and see if it's really too risky or not. But if you look at the price to book, for example, one issue with the price to book ratio, sure, it's 0.7, but one issue is the goodwill of the company. It has a lot of goodwill because it has a lot of big brands. And so if you have to think about, are those brands worth something? Because if they're worth nothing, then the goodwill could be written off. And they have right now, I think, a little bit over 100% of goodwill relative to their equity. So basically the goodwill could wipe out the entire equity and you'd be left with nothing, the company being worth nothing except for whatever it's earning. And if it's not earning anything in the future, it's basically, price to book doesn't matter. It's not worth anything. But if you think its brands are worth something, then it becomes a little bit more interesting. And you have to think, okay, are they worth something? I mean, they have Jeep. I think Jeep is a brand that people really like still. There's a certain niche of people who like outdoorsy people or want to be outdoorsy people. They really like that Jeep brand. Or, Fiat. A lot of people in Italy still have a passionate feeling about Fiat. Maybe nowadays a little bit less because of how it's been transforming, but there's something in their heart still for it. And other brands like Dodge. I mean, isn't that worth something when they have like the #1 minivan in the world? I don't know. It's kind of an interesting question. Are those brands worth keeping or not? And if they're worth something, just those names are worth something, which I kind of think they are, then the price to book might be pretty attractive. Now, one of the issues, of course, with this company, people are worried about electric vehicles coming along, and Fiat Chrysler is one of the slowest companies to adopt electric cars. They're only like recently kind of planning electric cars, and they have plug-in hybrid kind of options coming. And so can they keep up with the race? Well, the thing about electric vehicles that I think, if you held onto this company, its dividends, for 20 years, you'd pay off your investment. Probably more because they'd be growing their equity and whatnot. They maybe all change their dividend. So I don't know, maybe if you could hold on to this for 10 years, it'd be basically a fairly safe bet in my mind. And I think, well, would it be still around in 10 years? And EV market is currently 1% of, close to 1% of auto sales. Auto sales, they've been at over 70 million per year lately, but there could be a pullback, and maybe the average is closer to 50 million as a realistic number. So you could see, maybe up to a third of their earnings go down just from a shrink in the market for sales. So you could see them go down. In the future, their estimated earnings are expected to kind of like around the $3 range or €3 range. So if you went to a third, it'd be back to kind of where it is today. And then if you, on top of that, I mean, if EVs can become more popular, which I think they have an advantage in that if it was the same price for the same type of vehicle, but it was electric, I think the electric one wins hands down. I think people, as long as it's convenient enough to run in whatever situation you want, yeah, I think people would rather have the electric. So, or even if it was, a few $100s more, but when you become like triple or 3 times the price, I mean, look at a Tesla, they're selling for like $50,000-$60,000 for a car when you can buy something for like $20,000, which runs on gas. And then, sure, electricity is, a tenth the price or something, but it's not significant enough to make up that price difference. And so you're really, right now, the electric market is held a lot by people who are making pretty good money. So until you get down to the price point, electric car for $20,000 that runs really well, goes long distances. When they get to that point, I see a big change. Like basically all the sales will transition at that point towards electric vehicles. But I don't know that we're getting to that point yet. I think it's kind of a roadblock. So I think in 5 years you might be able to see a road to that point. But right now you see even Tesla struggling. Without rebates from the governments, they aren't, they're losing some demand. And so I don't know that you'll get to the point where people really will transition full force over to electric until you get to a price point. And for that reason, their earnings might slowly dwindle, but I think in the next 5 years it's unlikely to be anything worse than just a slowdown in the world economy. And then after that, the next 5 years, there might be a progressively slower growth. So yeah, but their financials are such that they're, almost no debt. It's going to be even better with the earnings that they have. They're earning quite a bit compared to their market capitalization. Could be a prime takeover from another company, or even if Tesla was profitable, maybe they could take it over. Anyways, but it would be I still see pretty good things for this company for the next 5 to about 10 years. After that, it could dwindle out, but realistically, after 5 years, this company is also going to be in the electric market. And as long as they have those brands that are making good money for them, if they can get rid of the other brands or restructure them so they are exciting as well, then I still think Fiat's got a pretty good future for it. So yeah, what do I think about it? Basically, price to book is pretty cheap, as long as they can keep their goodwill relevant, which I think they can. And the downside of this company is, just dwindling, but probably, make most of your money back, and the company would be sold probably and used somewhere else. You'd probably break even at least at the current prices, and in the long run they might even get into the electric market. They'll have good financials, and they might even, when it's cheaper, easier to make an electric car, and they might be able to keep their market share or even grow it in the future because they'll be better positioned financially. So very interesting, and I think their brands, have staying power for the kind of people that they sell to. And even gas engines, I don't think will go away completely for many, many years, considering some of the harsher climates will still need gas or diesel trucks. So it's just an interesting theory, but I'd like to know what you guys think. I do think it's a buy at this price, but I'd love to know your opinion. Feel free to write in the comments. Otherwise, thanks for watching, and we'll talk to you in the next video.